Hey everyone, welcome back to WealthyWise, your go-to channel for deep dives into crypto, markets, and wealth building strategies. Today, we're combining two huge conversations about one of the most talked about assets in crypto, XRP. First, Ripple's CTO David Schwartz says institutional adoption of the XRP ledger could be just months away, not years, not someday, but months. Second, we are going to explore a step-by-step plan to use XRP gains strategically, not to gamble or chase hype, but to create a realistic path to financial freedom. This isn't a Moonboy price call or financial advice. It's a strategy video designed to give you the full picture. What's happening behind the scenes, what catalysts are lining up, and how you can approach XRP like a pro. So grab a coffee, hit subscribe, and let's dive in. XRP has been around longer than most crypto projects. Launched in 2012, the XRP ledger was designed for a different purpose than Bitcoin or Ethereum, to become a universal payment layer. Ripple, the company behind XRP, chose a top-down approach. Instead of chasing retail hype cycles, they're targeting banks, payment companies, and institutions. Ripple's belief is that you don't have to onboard every single user individually. You can onboard a handful of global institutions, and those users automatically get access to XRP-powered systems behind the scenes. In a recent talk, CTO David Schwartz laid out Ripple's vision clearly. We're just a couple of months away from crossing the line into mass adoption. Not years, not someday, months.
Well, I don't even know what a blockchain is. It's just going to have to just work. And I think we're really close. I think we're just a couple of months away from turning some of those corners to true mass adoption, providing the financial services that ordinary people are known for.
He emphasized that people shouldn't need to know what blockchain is. They shouldn't need to manage private keys or understand ledgers. The tech should be invisible, like the internet today. You don't need to know how TCP/IP works to send an email. You just click send. Ripple wants blockchain to fade into the background while powering financial rails for the world. This institutional-first strategy means adoption may not make headlines daily, but it builds a solid foundation, one that could make XRP indispensable for cross-border settlement. There's a perfect storm of catalysts building for XRP. Let's break them down one by one. Spot ETFs. 1. Canada already has a live spot XRP ETF. If the US approves one, it would make buying XRP as easy as buying a stock in your brokerage account. Historically, ETF approvals bring in large, steady investors, hedge funds, retirement accounts, family offices, who prefer holding over trading, creating upward price pressure. 2. Futures expansion. Futures trading on US platforms adds depth and stability. More futures contracts mean more ways for big players to hedge positions, making the market less volatile and more attractive to institutions. 3. RLUSD stablecoin. Ripple is introducing RLUSD, a fully backed stablecoin to move massive amounts of money over the XRP ledger. This isn't just a stablecoin launch, it's a key step to make XRPL a settlement layer for tokenized assets and remittances. 4. Global licensing wins. Ripple has secured licenses in Dubai and Singapore, giving it regulatory clarity in two major financial hubs. This puts Ripple ahead of many competitors still struggling with unclear regulation. 5. Frictionless UX. The less users feel like they're interacting with crypto, the faster adoption will come. Ripple's focus is enterprise-level integration. Think of remittance apps or banks using XRP behind the scenes while customers only see their fiat balance. Combine these catalysts, and XRP isn't just a speculative token anymore. It's evolving into the plumbing of global finance. Let's connect fundamentals to the chart. Here's a realistic look at XRP's price scenarios heading into late 2025. Bullish case. ETF approval in the US plus RLUSD adoption could see XRP hit $5 to $10. This is a realistic upper band based on previous market cycles and new demand. Moderate case. Mixed catalysts keep XRP consolidating between $3 to $4.50. Bearish case. If regulators stall ETFs and adoption slows, XRP could stay in the $2 to $3 range. One tool to track trend health is the Weekly Relative Strength Index, RSI. RSI 50, market balance, bullish undercurrent. RSI 60 to 70, strong trend, breakout territory. RSI 50, momentum weakening, possible retests of lower support. For example, if ETF news pushes RSI into the 60s or 70s, that often signals the start of a trending move. In previous cycles, that momentum carried XRP to $3.40. A similar setup with stronger fundamentals could easily take it to $5 plus. On the flip side, losing RSI 50 would point to consolidation near $2.20 to $2.50. But here's the thing, price is only part of the equation. Wealth isn't built just by calling the next number on a chart. It's built by having a plan. Retirement or financial independence isn't about owning yachts or Lamborghinis. It's about freedom, being able to live well, take care of family, and do work you enjoy. A realistic target for many is around $120,000 a year in passive income. With conservative yields from tokenized T-bills or traditional treasuries at around 4 to 5%, you'd need roughly $2.5 million invested to hit that number. That sounds big, but crypto's upside makes it worth planning around. Even if you only reach half that number, you're far ahead of the curve. Let's turn price levels into a concrete roadmap. If XRP hits $100, 10,000 XRP equals $1 million. At $1,000, just 1,000 XRP equals $1 million. At $10,000, 100 XRP equals $1 million. These are scenarios, not predictions. The point is that even small holdings can make a big difference if catalysts play out. This is why dollar cost averaging, buying small amounts over time, is so powerful. You don't need to guess the bottom, you just steadily accumulate. And when adoption scales, your stack is ready. It's not about holding 50,000 XRP waiting for a miracle. It's about building steadily and positioning yourself for upside. The key to turning crypto volatility into wealth is having a profit ladder. Here's a 3-step plan you can copy and adjust. 1. Build a core stack. This is your long-term bag. Buy slowly, add during dips, and avoid panic selling. The goal is to hold through adoption milestones. 2. Sell strategically. Mark key levels like XRP's previous all-time high of $3.40. When price breaks these zones, sell portions, maybe 10 to 20%, to lock in gains. Move profits into stable, yield-generating assets like tokenized T-bills or high-yield cash accounts. 3. Diversify and hedge. Holding only XRP is risky. Keep some BTC and ETH as macro hedges, plus stablecoins for liquidity. In high-risk periods, hedge exposure with futures, inverse ETFs, or even just reducing positions. The point isn't to sell all your XRP at once, it's to convert volatility into cash flow. Wealth isn't just a number on a chart, it's the ability to use that number in real life. Why XRP? Why not just stick to Bitcoin or Ethereum? Let's break down XRP's unique positioning. Zero downtime. XRPL has been running since 2012 without major outages. Reliability matters to institutions. Speed and fees. Transactions settle in 3 to 5 seconds for fractions of a cent. Native DEX. XRPL has a decentralized exchange built into its protocol. No need for external smart contracts. Escrow transparency. Ripple's use of on-ledger escrow for billions of XRP is unmatched in transparency. Institutional focus. Ripple's regulatory-first approach has secured licenses in key regions, making XRP more appealing to traditional finance. This combination makes XRP less of a meme coin gamble and more of a financial backbone project. The crypto market moves in cycles, but Ripple CTO believes adoption could now accelerate rapidly. Instead of waiting years, he says institutional adoption is just months away. The timing matters. As traditional markets soften and regulators warm up to ETFs, the window for XRP to cement itself as infrastructure is here. With RHEL USD and tokenized real-world assets in play, XRP could become the first digital asset to achieve mainstream utility without hype. So where does this leave us? Price scenarios are realistic, not fantasy. $2.03 as a base, $5.10 as a bullish range if ETFs and adoption align. Utility is catching up with speculation, and Ripple's strategy bypasses hype cycles entirely. A disciplined plan, Buying steadily, taking profits, and diversifying turns crypto gains into long-term wealth. Whether XRP hits $10 or $1,000, the principle is the same. Strategy beats guessing. Thanks for tuning in to Wealthy Wise. If you found this breakdown valuable, hit like, subscribe, and let us know in the comments. Do you think XRP adoption is months away? Remember, this is not financial advice. Our goal is to give you the tools to think critically, not to tell you what to buy. See you in the next episode, where we'll keep pulling back the curtain on the projects shaping the future of money.